Hello and welcome. In this lecture video, I'll be talking about cost flows in a manufacturing company. I'll also talk about how to calculate cost of goods manufactured and cost of goods sold. And then we'll also do a practice problem on how to calculate cost of goods manufactured and cost of goods sold. So this diagram does a fantastic job of illustrating how costs flow in a manufacturing company. So remember from the prior lecture video manufacturing companies have three inventory accounts: raw materials, work in process, and finished goods. And then once we sell our finished goods, it moves from finished goods to cost of goods sold. Cost of goods sold is an income statement account. So when we receive a sales order, we turn that sales order into a production order. And what we do is we start to work on that production order. So let's say, for example, we make custom tables, and a customer comes to us and says, we would like you to make us a custom table. So then what we do is we start to assemble the table, and we contact the warehouse and we say, we need plywood, and we need 2x4s, and we need indirect material, we need some glue, and we need some screws. Okay, so those direct materials, which is the plywood and the 2x4s, get transferred from one inventory account, raw materials, to the next work in process inventory account. So they're transferred from raw materials to work in process. That's the plywood and the 2x4s. The glue and the screws, remember, those are indirect materials. They come down here to manufacturing overhead. Then when we start to work on our table, and we actually have our assembly line workers starting to assemble the table, those assembly line workers start filling out their time cards, and they charge their time to some charge code or responsibility center or job tied to that table. So they start to charge their time to making that table. So those assembly line workers, they're classified as our direct labor, and they start charging their time to that work in process inventory account associated with making that table. Okay? The production supervisor, their boss, who's overseeing the production of that table, but probably many other custom tables, charges their time to manufacturing overhead. Then what we do is during the accounting period, and this is something we'll talk more about in job order costing lecture videos, we apply manufacturing overhead to work in process. So that's a fancy word of apply, which means we're just going to move manufacturing overhead from our manufacturing overhead account, which collects our indirect materials, our indirect labor, and then any other manufacturing overhead costs that we have, such as utilities to heat the production facility or rent on the production facility. We have all those here. And then what we're going to do is we're going to take a portion of that overhead, and then we're going to move it out of overhead, apply it to work in process. Okay? Once we finish the goods, remember, this is the time that we're making that table. Once that table is completed and we've made it, we transfer the costs of making that table from our work in process inventory account to our finished goods inventory account. Remember, finished goods, work in process, raw material are all asset accounts on the balance sheet. They're all current asset accounts. When we finish that table, the cost of making that table that we transfer from work in process to finished goods is called our cost of goods manufactured. That finished table sits in our warehouse or our storeroom, wherever we keep it, until we sell it. Once we sell it, we transfer it from finished goods to cost of goods sold. Cost of goods sold is an expense account on the income statement. So we transfer that table. Let's say it costs us $100 to make the table. So we would transfer it from work in process to finished goods. We would increase finished goods by $100, the cost of the table, decrease work in process by $100, the cost of the table. Then once we sell it, we increase cost of goods sold by $100, and we decrease finished goods by $100, which is the cost of the table. Okay? So that's what I was saying down here. When the goods are sold, the cost of the inventory is recognized as an expense on the income statement. Remember, if we made this table in 2019, it sits as inventory in 2019 until we sell it in 2020. So if we sell it in 2020, it's going to show up the cost, that $100 cost of our table will show up in cost of goods sold on the income statement for 2020, but it will stay as finished goods inventory for 2019, okay, on the balance sheet. So this is the point at which it moves from the balance sheet to the income statement, okay? So when we look at our cost of goods manufactured, we can define our cost of goods manufactured as the cost of the units completed during the accounting period. And again, what do I mean by cost? The direct materials plus direct labor plus manufacturing overhead attached to those goods, those units that we completed during, cross that out, not yet completed. We're going to leave that as completed. It's the cost of the units completed, and it moves from work in process. But I got ahead of myself. Sorry. This is the cost of the units completed during the accounting period. What I was thinking is that it moves from WIP to finished goods. Work in process is the cost of the units not completed, not yet completed. And then we move those costs from work in process to finished goods. That is our cost of goods manufactured, which is the cost of the units completed during the accounting period. I apologize for that. I was getting ahead of myself and thinking work in process. Cost of goods manufactured is the direct materials, direct labor, and manufacturing overhead of those units that we did complete during the accounting period. The way we calculate that is we take the cost of our beginning work in process, the direct materials, direct labor, manufacturing overhead, attach those goods that we didn't complete at the end of last period, which then becomes our beginning for this period. I'm going to say that again. It's the materials, labor, and overhead attached to those goods that we did not finish last accounting period. That then becomes the cost of our beginning work in process. So it's the cost of our beginning work in process plus additional costs that we've incurred during this period. What do I mean by additional or current manufactured? I mean additional direct materials, direct labor, and manufacturing overhead, minus the cost of our ending work in process. That gives us cost of goods manufactured. This is the same thing as saying you had $5 to start the night, okay? And then you found an ATM receipt saying that you withdrew another $50. That means you had $55 to spend. Then what you did is maybe the next morning you look down in your wallet and you have $10 left over. How much did you spend? You spent $45. Same thing, okay? Our cost of the goods that we sold is the cost of the units sold during the accounting period. Okay? And what do I mean by cost? Again, what I mean is our direct materials plus our direct labor plus our manufacturing overhead. And the way we calculate cost of goods sold, it's similar to calculating cost of goods manufactured in the sense that we take the cost of our beginning finished goods plus our cost of goods manufactured. So we have to first calculate cost of goods manufactured to calculate cost of goods sold. So it's the cost of our beginning finished goods plus our cost of goods manufactured minus the cost of our ending finished goods gives us the cost of the goods that we did sell. You're going to go out with your friends. You have $5 to start the night. You withdrew another $50. The next morning, look down your wallet. You have $10 left over. Can you tell me how much you spent? Yes, $45. Beginning, ATM, ending left over, how much you spent. Same idea. Okay? So we can look over here. This shows us the calculation of our cost of goods manufactured and our cost of goods sold. So when we look at calculating out our cost of goods manufactured, it's going to be equal to the cost of the materials used, not the cost of the materials purchased. How can we figure out the cost of our materials used? We say, here's our beginning, the cost of our beginning materials, plus the cost of any additional materials that we purchased. That gives us the total cost of the materials that we could use. Minus the ending, what we didn't use, that is the cost of the units that of the materials that we did use. Plus our direct labor, plus all of our overhead right here, gives us our total manufacturing costs. This is the cost of our beginning WIP, minus the cost of our ending work in process inventory, gives us our cost of goods manufactured. Okay? So now let's walk through an example problem for calculating cost of goods manufactured and cost of goods sold. Beginning finished goods, ending finished goods, beginning WIP, ending WIP, materials, beginning and ending, and then we have materials purchased, and then we have direct labor incurred, and I'm reading that from the next page, and then we have our manufacturing overhead. So let's go ahead and calculate out cost of goods manufactured and cost of goods sold using T accounts, okay? So because our materials, those are finished goods, materials and work in process, those are all inventory accounts. They are assets, so they have the normal balance of a debit. So I'm going to put those on the left side of the T account showing the debit. So I have my $12,000, and I'm looking right over here. Beginning balance, and then it's told to me that I purchased an additional 13. And then if I look on the prior page, I had $9,750 left over in materials. I can then calculate how much did I use in materials by taking the $12,000 plus the $13,000 minus the $9,750 gives me $15,250. Okay, now that $15,250, we were told that's all direct materials, which means it moves over to work in process. Now we are told that we have a beginning balance in work in process of $8,500, and then we add in our direct materials, and then we add in our direct labor of $6,000, and then we also include our manufacturing overhead of $4,000. We're told on the prior page, here's the $8,500, here's the $7,000. We have ending of $7,000. So we can use our cost of goods manufactured formula to figure out the cost of goods manufactured, which is the credit to the work in process T account. Beginning WIP plus current manufactured costs, which is our materials used, our labor, and then our overhead, minus ending WIP gives us our cost of goods manufactured, which is the credit right there. And then we can calculate our finished goods. We are told on the prior page we had $18,000 beginning finished goods plus cost of goods manufactured, and then we had that $11,000 in ending finished goods, beginning finished goods plus cost of goods manufactured minus ending finished goods gives us the credit, and that credit is our cost of goods sold. Okay, I'm going to end the lecture video now, and the next one I'll start here.